If you don't know me, I'm Erin. I'm an account executive with Orion Lending. I've been at AE about 18 years, and a lot of you have met my inside account manager, Jared. He is awesome. If you haven't called and introduced yourself, definitely do that. He's a real go-getter, and he's the one pushing the files on the inside for me and helping with any condition questions. You can also speak directly with our underwriters. We don't hide them from you. We put their contact right at the top of every loan approval, which you can see online or in the PDF that was emailed to you. So feel free to reach out to them with any senior underwriting questions. Of course, me and Jared are here to help as well. And by the way, guys, I do have the chat open. So if you guys have a question, I actually have my manager, Michelle Wild, who is awesome. She's super knowledgeable. She's sitting in on the call as well. So feel free, as we go and talk about the down payment assistance, feel free to type your questions into the chat, and she will probably beat me to it in answering your question. If you don't know, we have you fully supported at Orion. We have employees in every time zone. Here's some of my favorite contacts that we have to support you here at Orion. And my number one favorite is our scenarios desk. So if you haven't utilized that, please do. It's scenarios with an S at orionlending.com. You can ask them anything guideline related. You can say, hey, look at this LOX I have for this derogatory on the credit. Do you think this looks good? They typically answer within about 2 or 3 business hours. Please CC me on those emails because they're going to have great feedback for you at the underwriting desk. I also have a lot of experience and may be able to chime in with something beneficial as well. So please include me on those emails as well. So why do down payment assistance with Orion? I'll tell you what's special about DPA with Orion. You're going to have your designated support team, like you saw me, Jared, and our designated underwriters. By the way, all of our underwriters on our team are very seasoned. So no newbies, they're experts. They know what they're doing, which is awesome. Also, we are fully delegated with Chenoa, which is going to be different than what you will experience with a lot of other lenders who are doing down payment assistance. We have full underwriting authority, meaning we don't have to send these loans off to Chinoa for approval prior to closing, which allows you to close much faster. We typically close these inside 30 days. And by the way, if you're ever curious about what our current turn times are, when you're logged into our portal, just click on the current turn times button and it will pop up and show you what our turn times are. And for Chenoa down payment assistance, it's actually just the same as any other FHA loan. We're running 1 day on setup, 1 day underwrite right now, 1 day conditions as well. Also, we have superior technology. If any of you still need a login to our technology, please email me and let me know. My email address is at the bottom of the screen, and we'll get you set up with a password and login for our portal. Our company really loves technology. They're technology nerds. They spent about $6 million on our portal. It's excellent. You can submit a loan literally in less than 3 minutes. Some of the cool features that I like is we have a strike price feature. That means if you're floating a loan and pricing is not exactly where you want it, you want to get an alert, a text, email, something when, let's say, 4% has a credit of a half, you just enter that in there and you will literally get a notification the second we release a rate sheet that meets that criteria. That's a really cool feature. Also, our system will pull in title fees for you automatically, and it's not fluffing them or inflating them. It's actually pulling in those live title fees. So you're just going to type in the name of the title company. You'll see it spinning and thinking, pulling them all in. We actually guarantee that they're correct or we'll cure them on the final CD. We also list all of our CD conditions right at the top of all of your approvals. It's going to say prior to CD. Get those into us first. We'd like to get CDs out as quickly as possible. Our system allows you to attach your documents to specific conditions. You can even add notes. Yes, we read them. So I definitely encourage you to add notes to the conditions. Our system also does the QM test right there in the portal. It will apply any seller contributions to the discount or to borrower paid comp to pass QM so that it prevents a QM fail before it even happens. As mentioned, you can get text notifications, and for all programs except Chenoa down payment assistance, you're going to be able to click a button, send out the disclosures to the borrower instantly for e-signatures. However, for down payment assistance, it's a little different. You're going to hit a button to request disclosures, and then our Chenoa desk is actually going to prepare the docs on the first and the second mortgage and send them out electronically for you. We just want to make sure that they're correct, and we do those on our end. You can also run DU and LP and view them side by side in our portal. By the way, if you haven't done a training on our portal and think you need one, you can scan the QR code on your screen. We do a training every Tuesday and Thursday. As mentioned, I think our portal is really user-friendly, even on the very first submission. But if you want to have them walk you through a sample submission, absolutely sign up for that. It's very helpful. We also have a star support chat online. Our little chat bot's name is Galexa. She's online 24/7. She can actually answer about 60% of any questions that you have, because we've programmed the frequently asked questions into there. But if you don't see an answer to your question, there's always going to be a live agent. They're on there from 10 a.m. Eastern time to about 9 p.m. Eastern time. So 11 hours a day, you'll be able to get live support right there in the chat. We also have the phone line and the email address. They answer emails very quickly as well. So let's dive into the details of the Chenoa. I know that's what everybody's online here for. So what is Chenoa? This is down payment assistance in the form of a second mortgage. And we're going to look a little bit more on how that works, but basically it's going to be included in the CLTV. So you'll have a LTV of 96.5 and a CLTV of 100% or more. This is offered by a subsection of Cedar Band Corporation. And obviously the intent is to increase homeowner opportunities to those who may not be able to purchase without this assistance. Why should you, as a loan officer, originate DPA? Obviously, you're going to be helping borrowers who need it most. You're building new real estate relationships, and we're going to look at marketing that we have already designed for you for your realtor contacts. And this is obviously, things have slowed down in the market. I hear that among a lot of loan officers, saying business has just slowed down. I think it's important when things do slow down to add more programs to your arsenal of programs so that you can close more loans. And this is definitely a product that you may not have looked at in the past that can quickly help you originate more loans. Who is a good fit for Chenoa down payment assistance? This is actually available for both first-time home buyers and non-first-time home buyers. A lot of DPA programs out there require that the borrower be a first-time home buyer. Chenoa does not. Also, this is for credit-worthy borrowers, 600 plus score. The first mortgage is a regular FHA loan. I know something that you guys are probably going to ask is, can you do this for conventional? Chenoa actually suspended the conventional program. So this is for FHA borrowers only for right now. And most of the guidelines are going to be very similar to any other FHA program, but we'll look at those in detail. But the minimum score is 600. It's for both low and high income borrowers. And a lot of DPA programs out there are targeted just to low income borrowers. This one is for all incomes, and we'll take a look at that a little more in detail here. Who is not a good fit? And this part is important. So if you're snoozing over there, please wake up for this part. Borrowers with really high DTIs are not going to be a good fit. And I'll tell you why. We'll look at the Dti Caps, and they're very lenient. It's actually per the AUS in most cases. However, the rate on the Chenoa first mortgage is obviously higher. So the Chenoa rate that you're going to be seeing for most of your DPA borrowers is 6.25 right now. That's subject to change, obviously. But when you plug in that higher DTI, the higher rate, it's going to drive already high DTIs up even higher. And we'll look at the couple of the most popular Chenoa options that are out there right now, but one of them is actually a repayable second. So if they're already at a high DTI and they go with that repayable second, that's going to have a payment on the second mortgage, again, it's going to drive the DTI up even higher. And a lot of our Chenoa loans that end up not working is usually because there was already a high DTI. Now we're at a 6.25. They may have the second on a payment on the second, and now the DTI is just blown. Obviously, HUD does not allow you to do a refer in DU with a DTI of 58%, for an example. So we really got to watch the DTIs, and we'll go over those DTI caps. Another person that would not be a good fit is somebody that's coming to you with no money for their closing costs and prepaids. Chenoa is going to cover the 3.5% down payment that is required for FHA, but the borrower really and truly needs to be able to cover their normal closing costs and prepaids, because there's not going to be a substantial lender credit on the pricing to cover their closing costs and prepaids. Most of them are actually at a discount, and we're going to look at that. So make sure that your borrowers who are coming to you, they do have their money for closing costs and prepaids. Seller contributions are great. They can help. They can even use other grant programs. They can get a gift, but somebody is going to have to cover the closing costs and prepaids on the transaction, either the borrower, seller, gift, grant. Somebody's going to need to cover it. So please keep that in mind when you're pre-qualifying these borrowers. So let's get into the options. There's actually 4 different options for Chenoa programs, but we're going to go over the most popular 2. These are the 2 that are working best. One of them is the 3.5% forgivable soft second mortgage. So this one is going to have a 30-year term on the second mortgage, but it's not going to have any monthly payments due. The rate is actually 0% on that second mortgage. Remember, you're going to be around 6.25% on the first mortgage. And that second mortgage is actually forgivable after 36 months of on-time payments on the first mortgage. So you're going to have your LTV at 96.5, a regular FHA mortgage. And then you're going to, once we include the 3.5% forgivable soft second, your CLTV is going to be at 100. Don't worry about structuring these in your LOS system. You can actually have it in your LOS as just a regular FHA loan. Once you pull in the 3.4 to our portal, you're going to select the Chenoa program as the loan purpose, and our system will actually add in that second mortgage for you into the CLTV. Even if you didn't have it in yours. Side note, fun fact, you're only going to have one loan number in our portal as well. So a lot of other lenders require that you have a loan number on the first and the second with their DPA. We like to keep it simple. You're just going to have a loan number on your first mortgage with us. We're going to handle everything on the second mortgage for you behind the scenes. I will say that this option, which is obviously the most appealing, the 3.5% forgivable, really and truly with current pricing has to have seller contributions. And we're going to look at a pricing example so you can see why I'm saying that. But though that option is at a discount, these are all borrower paid comp. You can make up to 2% on these, but because they're at a discount and they're borrower paid comp, you really need some seller contributions to go with that 3.5% forgivable second. If you don't have seller contributions, because I know they're tougher to come by right now, then I would look at only our 5% repayable. That one works out a lot better with lowering the funds to close. So this one is a repayable second. They're going to have a 10-year term on that second mortgage. They're going to make regular monthly payments on both the first and the second. The rate on the second is going to be higher than the rate on the first. So for example, if your rate on the first is 6.25, the rate on the second will be 8.25. It's not forgivable. They're making regular monthly payments on the first and the second mortgage. The CLTV on this one, after you include that 5% second, is going to be 101.5. Again, really watch your DTIs on these. And we're going to look at the Dti caps. So again, these are borrower paid comp only. That's a Chenoa rule. You cannot take these lender paid comp. You can make up to 2% now. It used to be 1.5. They raised it to 2%. 600 plus credit scores. They need at least 1 score. Manual underwrites are allowed. So if you get a refer, feel free to email me the credit and the DU. I'll take a look at it to make sure we're meeting HUD guidelines. HUD, as you guys know, will allow up to 3143 with no comp factors, 37 over 47 with 1 comp factor, and then 40 over 50 with 2 comp factors if you get a refer, if it's a manual underwrite. But I'm happy to help you guys with that if you run into a manual underwrite. You can run DU or LP. As I mentioned, you can run that in our portal. Gifts and other grants are allowed in combination with the Chenoa down payment assistance. There's no max CLTV. High balance is allowed. Side note, we can't do manual underwriting on a manufactured home. So if it is a manufactured home, it needs to be approve eligible. And non-occupying co-borrowers are allowed per HUD guidelines unless it's a manufactured home. And I get this question a lot. It's just regular MI, regular monthly, and the upfront mortgage insurance, just standard FHA for those. They actually can own another home as long as there is an acceptable explanation. You'll need to write an LOX. Obviously, we need to be 100% sure that the borrower is going to be occupying this property. And this product is available nationwide except for New York. So let's look at the DTI, because as I mentioned, this is super important. If I do see a Chenoa loan fall out and not work, it is usually a DTI issue, but due to that higher rate of 6.25. So you are gonna, it's per the AUS. So run your DU, you can do it in our system with the correct rate, 6.25. If you're doing the second mortgage that's repayable, make sure you include that. Our system will do that automatically if you're running DU in our portal. You just need to make sure it's approve eligible. If it's manual, then like I said, then we'll defer to HUD's caps on manuals. Also, you need to look at payment shock. So it's okay if they're rent-free right now. We would need a rent-free letter from the landlord or owner of that property, but then you need to definitely look at payment shock in the rent-free situations and in situations where they're going from not paying much rent to now paying a lot of rent. If they're in that lower score bracket, the 600 to 639, then you're limited to 125% payment shock when the DTI exceeds 3143. So if they do have a big jump in payment, then you really need, and it's a lower score under 640, we need to keep that DTI low. If they're 640 and over, there's no payment shock restrictions. So you really just need to look at the payment shock and what the housing expense is increasing from and to with those lower scores. So what kind of property types? So obviously single family residence, PUD. I love that we can do 2-unit for Chenoa because they can, this is a great opportunity for buyers. So they can buy a duplex, live in one side, rent out the other side. So definitely, I think that's something that you can market to your borrowers is the opportunity to secure a duplex with these this program. Also townhomes, condos, attached or detached. Before you guys ask, we actually do the single family condo approvals at Orion. So if you have one that's not yet HUD approved, when you check the list, then you can send that in for condo approval, and just email me on the side if you want the details on how that works. Also modular and manufactured homes is actually single and double wides. No manual underwrites if it's a manufactured home, and no non-occupying co-borrower if it's a manufactured home. Obviously, the normal FHA rules apply. We will need the structural engineer report, and it has to be classified as real property with the tags retired. And I see that if the question from Alex in the chat, we're actually going to look at a pricing example that will explain that exact question. So just bear with me. I ran some pricing before we jumped on the call, and I'll show you how that additional 1.5 applies to the closing costs. That's a great question. So ordering appraisals, I strongly encourage you to order your appraisals in our portal. We have over 15 AMC options in the portal. You are able to select the AMC of your choice when you're ordering in our portal. No sign up is needed. So even if your company is not signed up with one of the AMCs, doesn't matter. You're brokering these, you're doing these as wholesale loans with us. We're the ones that have to be signed up. So no sign up required. Some of our AMCs will even let you set up appraiser panels. So if that's something that you're interested in, reach out to me. I can give you the details on those. A lot of people ask, do you have a favorite AMC? I actually do. There's nothing in it for me. This company's never even sent me an Amazon gift card or anything. They just have amazing customer service. It arrives. We actually have 3 reps over there. They're extremely responsive. You can reach them by phone, email, And I'll send this to you, by the way, if you guys are going to be ordering with them or any of our other AMCs and you need their contact information for assistance, please let me know. Okay, so as I mentioned, when we try to make it as easy as possible in our portal. So when you do order the appraisals in our portal, they are tasked back to the underwriter automatically when they come in, even if that's the only condition that's in, which is really nice. We would order any revisions or corrections for you. We even have the option to send the borrower a payment link. So if you have somebody that's not comfortable giving you their credit card information for the appraisal, you can defer payment when you order the appraisal and then send them a payment link. They can look up the property address and secure the payment on their end. Just make sure they do that promptly. You don't want their appraisal on hold. So homeowner education with, as ironic as it is, I have education spelled wrong on this slide. So that's a good time. So 600 to 619 scores, they are going to need to do the education through Money Management International. I can send you the link to complete that. It's just a 1 hour course that they actually do by phone. It's quick, easy to knock out. If they're 620 to 639, they can use any HUD approved counseling course. And then if they're 640 and up, they do not need any homeowner education. So let's look at the pricing examples, because I really think for you guys to really fully grasp how the down payment assistance works, then you really need to be able to see the pricing and the discount or the credit, and to really grasp what the borrower is going to be needing at the closing table. So first, we're going to look at the Chenoa soft second. That's the forgivable second mortgage, which is going to have worse pricing. That's the one that I'm telling you that you guys really need seller contributions on at the moment. And then we're going to look at an example that really doesn't need seller contributions as much. So this one's the 3.5% Chinoa. So when you guys are pricing these in the portal, don't price it as a regular FHA purchase. You're going to need to put the loan purpose as the 3.5 forgivable Chenoa soft second. We go all the way down to a 600 score, and the score doesn't really impact the pricing on the Chenoa loan. So I priced this example with 600 score. These are all borrower paid comp. Again, you can make up to 2 points. So the most popular is the highest rate on the rate sheet, which right now is 6.25. That's subject to change. It does have discount points. So this is the reason that I'm telling you, for this 3.5% forgivable, you really need seller contribution. So if the Chenoa is going to pay their 3.5% down payment, as I mentioned, your borrower really needs to have their own money for closing costs and prepaids. And then in this scenario, it would be really nice if you had seller contributions to pay this 1.5% discount point plus your 2% borrower paid comp. So let's just say on this scenario that we're running, I just ran this right before we jumped on the call. I would say your borrower needs to be able to cover their own closing costs and prepaids, and you would want about 4%, between 3.5%, 4% in seller contributions to be able to cover this discount point of 1.8 plus your borrower paid comp of up to 2%. You don't have to charge 2%. If you guys want to charge 1.5%, 1%, whatever you want to do, the max is 2%. So right now, unless something drastic changes with pricing for the 3.5% forgivable that has no payment on the second, is forgivable after 36 months, you really and truly are going to need to see some seller contributions on the contract. And again, this is due to the fact that it's at a discount point and these are borrower paid comp. So let's say you have a contract, no seller contributions. What's going to be the best fit? That is going to be the 5% repayable Chenoa DPA. And I priced this one out right before we jumped on the call. So as Alex asked earlier in the chat, how does this 5% repayable work? So Chenoa in this case is going to pay the 3.5% down payment. And then you're going to have 1.5% left over coming from Chenoa to go towards closing costs and prepaids. So in that case, you would use half of that 1.5% going towards closing costs to pay this 3/4 discount. And then you would still have 3/4 left over to go towards the remaining closing costs and prepaids. So in this scenario, Chenoa is going to pay the 3.5% down payment. Obviously, they're going to do an additional 1.5 towards closing costs. which that is going to cover this 3/4 discount point. You'll have another 3/4 left over. The borrower is still going to need to bring their closing costs and prepays to the table unless you use this 5% repayable option in conjunction with seller contributions, which is totally fine. FHA allows up to 6%. Then they may not have to bring anything to the closing table. So let's say you do this 5% repayable option and they're getting ample seller contributions. They may not have to bring anything to the closing table. But if you're using this option with no seller contributions, then what they're going to need to bring to the table is still just their normal closing costs and prepaids. And I want to pause for a second and make sure that the pricing is making sense, because I think that this is such an important part of understanding how the DPA works. Oh, and I see a question in the chat about the forgivable second. Yes, and Michelle already answered it for me. Thank you, Michelle, that there is a pricing hit, and that was actually going to be my next screen. So let me just show you guys how that works. So if the borrower is over 135% of the area median income, then there is a pricing hit. And when I priced one this morning, it was just 1/4. So here's how you would find out if your borrower is over 135% of the area median income. You're going to go to this HUD.gov site, and I can send this to you. You're going to actually, let me go back. You're going to click on this button that says click here for the income limits. And then it's going to have you select the state and the county, and then view county calculations. And you're going to ignore everything on this side of the screen. Doesn't matter how many people are in the family. You're just going to go by this number here, the family median income. I just ran an example for Fulton County in Georgia. That area median income is $86,200. You're going to take 135% of that, which, spoiler alert, is $116,370. So that is 135% of the area median income for that county. If they're over that, let's say they make $500,000 a year, totally fine. They can absolutely still get down payment assistance through Chenoa. They're just going to have a pricing hit, which, like, as I mentioned today, when I priced this, was 1/4. For being over 135% of the area median income. So that's something that we're going to check in underwriting. And if they're over 135% of that area median cap, then we're going to add a pricing adjustment to the pricing for them being over the cap. Also, fun fact, that limit only applies for the qualifying income for our borrowers only. We're not looking at income for the entire family like USDA does. We're just taking the qualifying income that you guys put on the 1003. The underwriter is going to check the calculation, obviously, as well. And if they're over 135%, totally fine, can still get that DPA through that program. We're just going to have a pricing hit. One question that I get a lot is, will you guys fully underwrite this prior to contract? And yes, we will. If you guys are just getting your feet wet with Chenoa or down payment assistance, then that may be an excellent option for you. So you can submit these loans for a full underwrite prior to contract. You're going to keep that same loan number all the way through closing. We don't require that you resubmit it. We're 1 day setup, 1 day underwrite. No disclosures are going to go out until after you upload the contract. And if you convert that TBD underwriting approval to a contract within 30 days, then we'll actually do an additional $500 lender credit on the CD at closing, which is pretty cool. That pays them back for their appraisal, basically. You cannot lock prior to contract with us, but you can definitely submit for a full underwrite prior to contract. So how do you market this to your borrowers and mainly your real estate agents? We have a free marketing studio, and these are not just flyers. This is a real life studio. So everything's already pre-designed for you, but it's totally customizable. So you can go in there. This is actually a real screenshot from our portal. So you're going to, when you log into our portal, you're going to click on Marketing Studio at the top right. It's going to pull up a screen that looks like this. You're going to have tons of flyers on all of our loan programs. But obviously, I know that you guys are interested in marketing for DPA. There's all of this that you see on your screen is already in there. And there's way more than this. I couldn't fit it all on there. It's already in there. It's already designed. It's going to pull in your name, your photo, if you want it, your contact information, but it's not branded with Orion. So right here where you're seeing Orion, that's going to be your branding. The reason it says Orion is because I took the screenshot from my portal and I work for Orion. So this is not branded with Orion. It's going to be your branding. It's a social media post in there as well. If you guys want to post these to Instagram, there's tons of stuff in there for your real estate agents. As far as listings, everything's in English or Spanish. So you select the language that you want it in. And like I said, it's fully customizable. So if you don't like a photo that's used on the flyer, click on it. There's over 1 million copyright-free images in there. You can switch everything up. You can email right to your real estate agents right there from the Marketing Studio, or you can, of course, save it and send it to borrowers and real estate agents outside of the Marketing Studio. And I think, Michelle, thank you so much, because I think you've answered all of the questions in the chat. And I do have Michelle Wild. She's my sales manager on the call. She is an expert on down payment assistance as well. So feel free to chat anything in. If anybody wants me to go over the pricing again, please put that in the chat, because that's such a big part of understanding how these DPA programs are working. So if anybody wants me to go back to the pricing screen and run through that again, please let me know. And Kyle, that is a great question. There is a 5% forgivable option. However, with the way pricing is right now, there's no benefit to it, because what is happening right now is with the 5% forgivable option, that has the additional 1.5 towards closing costs. However, there is a 1.5 additional discount on that program right now, and those two things wash each other out. So I would not, for the time being, even look at the 5% forgivable. There's not a benefit to that one at the moment. The two that are working great right now are the two that we went over, the 3.5% forgivable and the 5% repayable. And yeah, so I did see we want to go back over the pricing. So I figured that. So if you weren't zoned in here to the pricing the first time, I'm going to go over it one more time, because it's so important to understanding how these loans work. So the 3.5% forgivable option is the one we're going to price right now. This one is the one that absolutely you have to have seller contributions on the contract with the way pricing is right now. If you have a contract with no seller contributions, do not look at this option, because by the time you add in the discount points of 1.8 plus the borrower paid comp of up to 2 points plus all their normal closing costs and prepaids, if the borrower has to come out of pocket with all that, you might as well just go with a regular FHA loan at that point. So this one, only look at this one if you have seller contributions, unless something significant changes with the pricing. So how this is going to work is Chenoa is going to pay the 3.5% down payment. Obviously, you really want to see enough seller contributions on the contract to cover this 1.8 in discount points. By the way, this is totally subject to change. So this was the pricing right before we jumped on the call. It could be different tomorrow, better or worse. But right now, this 6.25 has discount points of 1.8. You have borrower paid comp on these that are not included in the pricing, up to 2%. So in this scenario, I would say you really want to see enough seller contributions to cover your comp of up to 2%, plus the 1.8 in discount point. Let's just say you're going to have between 3 and 4 in seller contributions. That way, the only thing the borrower needs to bring to the table is their normal closing costs and prepaids. That is the way to maximize the benefit on this particular forgivable option. And this is the one that has 0% interest on the second, no payments due on the second. They're only making a payment on the first, and then it's forgivable after 36 months of on-time payments on the first mortgage. Now, let's say, yes, and gifts are totally acceptable. So if the borrower, if they don't have their own money to cover the closing costs and prepaids, they can get a gift. Regular HUD guidelines on that. They can get a grant. They can even use other eligible seconds, like community seconds or something. But if you guys are just wanting a rule of thumb for right now to just kind of get a grasp of the program, if you're looking at the 3.5% forgivable, you want enough seller contributions to cover the discount in your comp. And then you want to make sure the borrower can bring their own closing costs and prepaids, just as a rule of thumb. And let's go to the 5% repayable. So let's say you have a contract with absolutely not $1 in seller contributions. I would look at this option. This is the 5% repayable. Obviously you can use this with seller contributions, and that will really cut down on what the borrower needs to bring. But if you have a contract with no seller contributions, only look at this one. Do not look at the 3.5% forgivable. So in this scenario, Chenoa is going to pay their 3.5% down payment, and Chenoa is going to pay an additional 1.5% towards other closing costs. And that's where the 5% is coming from. So the 5% second consists of 3.5% towards the down payment, 1.5% towards closing costs. That can be used to pay this 3/4 in discount points. So let's say, just as an example, that they're going to use that 1.5% additional that Chenoa is doing to completely pay this 3/4 discount. And then you would have another 3/4 left over to, maybe pay the underwriting fee or pay towards your borrower pay comp. But the borrower is still going to need to bring their normal closing costs and prepaids with this scenario as well, unless you have those seller contributions or a gift or a grant or something else paying it. But this is the one that you want to look at if you don't have seller contributions, just to keep those funds to close as low as possible. But again, I cannot stress this enough. When you guys are pre-qualifying borrowers, just in general for Chenoa, I would, as a rule of thumb, make sure that they can cover their closing costs and prepaids. That's really who this program is designed for. It's designed for borrowers who have money for closing costs and prepaids, but they don't also have money for the 3.5% down payment on top of that. It's just kind of to fill that gap. So for example, it's for a borrower who, let's say, has $9,000 that they can contribute towards closing costs and prepaids, but they don't have $20,000 to also pay the down payment. Just throwing that out there as a example. And yeah, great question on the DTI, and I see Michelle already answered that for me. The DTIs, it's just going to be per the AUS. If you get a DU approval, unless it's a manufactured home. Manufactured homes do have DTI caps. And then the payment shock, thank you, Michelle, for answering that as well. So if they're 640 plus, there's no payment shock restrictions at all. So even if they're going from rent-free to now having a mortgage, that's totally fine if they're over 640. However, if they do have substantial payment shock over 125% at a score that's under 640, then you really want to keep that DTI low at 3143. That's just for that lower score range. And I want to pause. I know we covered a lot. I'm going to send out this recording, but I want to pause and see if you guys have any additional questions for me or Michelle. We make these loans as easy for you as possible at Orion. Like I said, we have full underwriting authority. We underwrite them all in-house. We don't have to send them off. So you can close these inside 30 days. And we do all of the disclosures for you on the first and the second. And our portal is really high tech. It's going to structure the loan for you. Even if you don't have that second mortgage in your LOS, totally fine. Just make sure you select Chinoa when you're submitting these. And then I see a question to go over the 5% repayable. So the 5% repayable is the one that you want to look at if you do not have seller contributions. And just to recap on how that 5% repayable works, because you really have to watch your DTIs on these Chenoa loans, because your rate, obviously this is subject to change right now, is 6.25. You got to make sure that you're qualifying them with that higher rate. And this repayable mortgage is a 10-year term with a rate higher than the rate on the first. So based on today's pricing, you would have to include in your DTI a second mortgage of 5%, the 5% of the purchase price. And that is going to be a 10-year term on that second mortgage with a rate that's higher than the first. So if our first mortgage rate is 6.25, the rate on that second mortgage is going to be 8.25. And you have to make sure that when you're looking at DTI and you're running the DU, that you're accounting for that. And there's no max DTI with an approved eligible. Just make sure that you're using those correct payments, correct numbers when you're running these in your DU. You can run the DU in our portal. But I got a request to go over this pricing again. So how the 5% repayable works is Chenoa is going to pay the 3.5% down payment, and then they're going to pay an additional 1.5% towards other closing costs and prepaids. So let's just say you don't want to make 2 points on this. You're trying to help the borrower out. You're going to just charge 1.5 on a loan. Then that additional 1.5 towards closing costs that Chenoa is going to do really just pays your 1.5 borrower paid comp. And then what the borrower is going to be left with to cover is the 3/4 discount plus their closing costs and prepaids. Can you use this program with seller contributions to cover the closing costs and prepaids? Absolutely. So if you have a borrower who's super limited on funds, but they do have seller contributions, you can still look at this scenario. And that's one way to really and truly minimize what the borrower is going to have to bring to closing. And I see a question, since Orion is fully oh yeah, Michelle, I'm so glad she's on the call. She's beating me to the question. So yes, the Chenoa lock desk does cut off early. So our normal lock desk is open pretty late, past normal business hours and on Eastern Standard Time, but Chenoa does close early. So make sure that you guys are locking these prior to that cutoff. So I know we threw a lot at you. What other questions do you guys have? Please chat it in, and we'll remain on the line to answer any questions. If you guys don't have any more questions, feel free to drop off. We covered everything you guys need to know. If you think of something after the call, my contact information is right there on your screen. You can also email our scenarios desk if you have like a credit report or something that you want to look at. Just CC me on the email. But we are here to support you guys in any way we can. By the way, be on watch your emails, because I'm going to be sending out another email link. Orion has a fantastic DSCR program. That is the no income doc loan, no income at all for investor occupancies only. We have a fantastic DSCR product, very clean underwriting guidelines, very good rates. I'm going to be sending out a link to register for a training on those. So watch your emails on those. And I'm just going to hang on the line here for a second to see if anybody else has any other questions. But if you don't have any questions, feel free to drop off, and I really appreciate your time. I'll get the recording out to everybody as well. Oh, and I see a question. What is the pricing adjustment for 3 to 4 unit? You actually cannot do 3 to 4 unit on Chenoa. So that's a great question. You can do single family resident, condos, townhome, PUD. 2 units are eligible, but 3 to 4 units are not eligible for Chenoa. That was a great question. But you can do duplexes, and I think it's an awesome product to offer to your borrowers, that they can live in one side and rent out the other side. So duplexes are allowed, 3 to 4 units are not allowed. And great question on the pricing adjustments for scores. So Chenoa actually makes it simple, and the pricing is the same all the way down to a 600 score. So whether they have an 850 or a 600, you're still going to get that pricing that I showed you today that is totally subject to change, but that was the pricing when I logged on today. But yeah, Chenoa makes it easy, and that a 600 score is going to be the same pricing as an 800 score. And absolutely, I see a question from Owen. Can you upload a loan and get it in the system to see if you have a DU approval? Absolutely. And I highly recommend that, because if you're new to DPA, you may not know exactly how to structure it in your own DU with that second mortgage and the higher rate and the payment on the second, and if you're doing the repayable second. So absolutely, if you want to run it in our system, just pull in your 3.4. As I mentioned before, you don't have to have that second mortgage in your 3.4. Don't even try to worry about setting that up. Just pull in your 3.4, select the down payment assistance program as the loan purpose, and our system will override what you've done on the LTV and CLTV and include those payments. And then you can run DU right there in our portal. It's very, very easy. That was a great question. We do not do no score for Chenoa, or actually Chenoa does not do no score. So you need a 600 score or higher and at least one score. It's okay if they have one score, but they do have to have a score. And you guys are asking great questions. So great job with hitting us with the questions here. And yes, you can have a non-occupant co-borrower on these unless, or co-signer, unless it's a manufactured home. Manufactured homes, Chenoa does not allow a non-occupant co-borrower on just the manufactured home property type. Oh, and thank you, Michelle. The co-signer income isn't included in the AMI. That's a great point. And again, just to emphasize that again, there is no income cap anymore on Chenoa. There used to be income caps. They got rid of it. If they're over 135% of the area median income, it is simply a pricing adjustment now. And when I checked it today, it was a quarter, but no income caps on these anymore. And I'll hang back as long as the questions are still coming in. You guys are coming up with some great ones here. Any other questions? Last call. And again, please be on the watch for my emails going out on signing up for our training on our DSCR no income doc investor loan. That's just a really hot product. I know things have slowed down for loan officers. A lot of loan officers are looking for ways to close more loans. And I really think expanding to these products that you weren't looking at previously is a great way to get your volume up. So the down payment assistance, the DSCR no income for investors. We also recently rolled out a bank statement program. So just expand your horizons with your products to keep your volume up. Well, I don't see any more questions in the chat. So thank you for joining me, and thank you, Michelle, so much. You were so helpful answering these questions in the chat. And please, please, please reach out if you have any questions at all. We're here to support you guys in any way. And I am looking forward to seeing some Chenoa loans come in from you guys. So thank you guys again, and enjoy the rest of your day.